Okay, so today we are going to look at IS1, IS1, which is a presentation of financial statement. So, and under this, we are going to look at the definition of this IS1. We are going to look at the definition of some terms and general features and principles relating to presentation of financial statement. And we are going to look at the relevant information to users. We are going to look at the component of financial statement. So these are the things we are going to look at under IAS1, and we are going to do it in such a way that each and every one of you will understand what we are doing here. So, and okay, what exactly is this IAS1? IAS1 is the presentation of financial statement. What is the presentation of financial statements? This is prescribes the basis of preparation and presentation of financial statements meant for general purpose. So what this means is that this IS1 describe how you prepare your financial statement and how you present the financial statement for general purpose, that is for publications. So, and each financial statement, we have users of financial statements, so they are expecting this, they make decision with this. First, okay, let's look at who are the users of this financial statement. One, we have the shareholders, we have lenders, we have employees, we have governments, we have potential investors, so these are some of the users of this financial statement. So you are expected to prepare your financial statement and present it to these people in accordance with this IS1, because it has to be transparent, and you can compare this information from the previous year to the current year, or you can compare this information with another company. So that is what this IS1 is saying. So now let's look at the definition of terms under this IS1. The first thing is we are going to look at what is financial statement. So we are going to look at this financial statement. Financial statement provide a picture relating to the financial health of a business. That is a statement that shows the financial performance, financial positions, and cash flows of a business entity during a specific period. So what this means is that, let's assume from January to December, for let's say 2001. So this financial statement is where you see all the affairs, the activities of this entity from January to December. So you can only present this with financial statement. You cannot tell the shareholders, okay, this is how this company is going, this is it, this is no. You have to prepare financial statement. It's the financial statement that will tell them how their business is doing. So that is financial statement. It has a specific period. And now say, okay, January to December, that is it. You cannot leave it open. So that is a financial statement. So secondly, we are going to look at statement of profit or loss. statement of profit or loss. So this statement of profit or loss shows the profit earned or loss incurred by a business entity during a specified period. So what this means is that, and this statement of profit or loss is a statement that will tell the investors, the users, financial users of the financial information, okay, this business, we earn so and so profit within this period, or we incur this loss within this period. So this is meaning of a statement of profit or loss. Then going to look at a statement of financial position. Statement of financial position. So this statement of financial position is a statement that shows the financial wealth of a business entity as at a particular date. So this statement of financial position is a statement that shows the asset and liability of an entity within a stated period. Like if we go back to our example, January to December 2021, so within this period, this statement will show the assets and liability of the entity. That is it. Then the next one we are going to look at statement of changes in equity. Statement of changes in equity. So this is the fourth one, which is a statement of changes in equity. This statement shows the movement in an ordinary share capital and reserve during a specified period. So what does this mean? Is equity capital contributed by the shareholders, whatever they put into that business, and if there is any changes within that period, this is a statement that will show that changes. So maybe they invested let's say 3 million naira from January. So within that period, January to December, what happened to their capital? What is the movement? Is it that the capital has increased or decreased, or is still 3 million naira? So this statement is the one that will show that. Then the next one is other comprehensive income. Other comprehensive income. So this other comprehensive income, the income and expenses, usually is unrealized gain or losses that occur during the period, not recognized in statement of profit or loss. So this other comprehensive income is, we have profit for the year, profit for the year. So this is a next one, which is profit for the year. This is a profit earned during a specified period. So like I told you, let's continue with our example, January to December 2021. So within that period, what is our profit? Not a statement that will show income, expenses, no. What actually is our profit within that period? That is what this one is saying. So then we can now move to the next one, which is loss for the period. Loss for the period. So this one is the opposite of profit for the year. So in business there are two things: you either make profit or incur loss. So this is the loss we incur within that period. So that is what this one is saying. So I think we are done with the terminology. terminologies. Then now let's look at another key aspect of IAS 1, which is the general features relating to presentation of financial statement. So we are going to look at this now. Under this, we are going to look at what is going concern. So this is going concern assumes that financial statement should be prepared and be presented based on the assumption that the reporting entity will continue to exist for the foreseeable future. And that is on the assumption the reporting entity will not come to an end. What is saying then the next thing we have accruals. Accrual basis. Accrual basis. So what is this accrual basis? This accrual basis states that financial transactions and events should be recognized or reported in the accounting period when they actually occur. Cash basis. So this cash basis is the opposite of accrual basis. This is whereby you only record transactions when you actually receive payment or you made payments. That is the only time you record it transactions. That is what this one is saying. So we have the next one is materiality. Then we have offsetting. So IAS 1 does not allow asset and liability to be offset or income and expenses. What this one is saying is you can only offset asset and asset, liability, income, expenses. You cannot offset income against expense. So that is what this one is saying. It's only permitted if it's required by another standards. But if it's not required by another standard, you are not allowed to offset asset against liability. Then the next one is frequency of reporting. So frequency of reporting is the financial statement have to be presented at least annually. This is the normal reporting period, which is 12 months. So, but you can prepare your financial statement on quarterly basis. But what is required by the law is 1 year. That is one calendar period, 12 months. So you must be consistent with that. Not that you prepare it this year, you will not prepare next year. That is against the law. So this one, to be consistent, that is you have to prepare it as stated. That is consistency of presentation. So this comparative information is saying that regarding you can compare your financial statement of 2022 with that of 2021. So that is what is saying. You must prepare your financial statement in such a way that you can compare the two together, which current year against the previous year. That is what this one is saying. So we are now going to look at component of financial statement. component of financial statements. So, component of financial statement. According to IAS 1, presentation of financial statement, complete set of financial statements should include the following. That is, as I told you that financial statement comprises so many statements. So now this IAS 1 give us spacement of what is expected to be called financial statement. 1, you must have statement of financial position, statement of financial position. Then 2, must have statement of comprehensive income. Then 3, must have statement of changes in equity. Changes in equity. Then we must have statement of cash flow. Cash flow. So then we must have a note to accounts. So these are the statements that are expected according to IAS 1 to make up comprehensive financial statement. So the structure